Hello everyone, we are from Group 1 and we would like to present today about report proposal to Board of Directors on Nestle Malaysia. Before that, I would like to introduce our group members, which is Farahani, Nur Shalia Shamira, Anusri, Damayanti, and Liao Jinning. Nestle Malaysia, a powerhouse in fast-moving consumer goods industry since its inspection in 1912. Nestle Malaysia has become a household name touching millions of lives daily through iconic brands like Milo, Maggi, Kit Kat, and Nescafe. This analysis explores the company's performance, particularly in terms of financial results, and compare them over 3 years period from 2020 to 2022 using charts. We kick off with capital structure, a crucial blend of debt and equity financing that optimize cost, managing risk, and maximize shareholder value. This financial flexibility ensures growth while maintaining stability in an economic uncertainties. Next, ratio comparison becomes our lens to evaluate performance. Examining key ratios like debt to equity, EPS, and ROE provides insight into debt reliance, profitability, and effective use of shareholder funds. These ratios simplifies decision making by offering a quick overview of the company's overall financial effectiveness. Lastly, we delve into Nestle Malaysia dividend policy. By analyzing past dividend payout ratios, dividend yields, and etc., we unveil a strategy that maintains investors' confidence, caters to diverse preference, and strives for stability in line with growth plans. This report of Nestle Malaysia financial reliance, showcased through its capital structure, ratio analysis, and robust dividend policy, paints a compelling picture of financially sound and future-oriented organization.
Now I will continue to the second part, which is analysis on the capital structures. It refers to the specific combination of debt and equity. Equity capital is derived from ownership shares in corporation and claims on its future cash flow and earnings. Equity capital is generated by owning shares in a company and claiming future cash flow and profits. Now I will continue with the A part, which is capital structure of Nestle Malaysia Berhad. It is divided by two composition, which is the first one is total shareholders equity composition. Nestle Malaysia total equity comprising share capital, reserve, and retaining earnings reflects the collective ownership interest of its shareholders. And the second composition is debt obligation composition, which is this section includes by two components, which is current liabilities and non-current liabilities. The capital structure formula is debt obligation plus total shareholders equity. It shows that the capital structure has increased by year. Now I will continue to the B part, which is ratio applied to Nestle Malaysia capital structure. Nestle Malaysia capital structure is evaluated through key financial ratios, offering insight into the company's financing needs and potential financial risks. Analysis of this ratio reveals trend in debt utilization and impact on Nestle Malaysia overall financial health. It is divided by three, which is the first one, total debt to total asset ratio. The second one, debt to equity ratio. And the third one is long-term debt to capitalization ratio. Now, I will continue to presenting the first part of the ratio, which is total debt to total asset ratios. The formula for total debt ratio is total liabilities divided by total asset. Nestle Malaysia increasing ratio from 2020 to 2022, which is from 0.81 to 0.82, which is suggests a slightly higher dependence on the debt to finance its asset. This may raise concerns about increased financial risk as a higher proportion of assets is funded by debt. Now, I will continue with the second part, which is debt to equity ratio. The formula for debt to equity is total liabilities divided by total shareholders equity. Nestle Malaysia increasing debt to equity ratio from 2020 to 2022, which is from 4.14 to 4.67, which suggests a higher level of debt relative to equity. This may imply increased financial leverage, which can enhance return but also introduce higher financial risk. And the last ratio is long-term debt to capitalization ratio, which is the formula is total of long-term liabilities divided by total of long-term liabilities plus total shareholders equities. Nestle Malaysia increasing ratio from 2020 to 2022, which is from 0.47 to 0.52, which suggests a higher proportion of long-term debt in capital structure. We are going to the last part, which is the potential reason for changes in Nestle Malaysia capital structures. It is divided by three, which is the first one is economic condition, which is Nestle considers factor like leverage and debt capacity to maintain a balance between cash flow, profitability, and asset quality to ensure prudent financial health and efficient capital utilization. The second one is market condition, which is Nestle aligning its capital structure with investor preference to become the imperative as it influences the company capacity to raise equity capital. And the third one is business risk. Nestle Malaysia operating in a consumer goods sector, which might favor a more conservative approach given the relatively lower business risk associated with the industry compared to, for example, capital intensive sectors.
Debt to equity ratio is a financial metric that compares a company's total debt to its total equity to provide a view of a financial structure. This ratio compares all debt including current money to all equity, knowing the amount of funds provided by the creditors and the company's owner. A lower debt to equity ratio indicates that the company has less debt in relation to its equity, and a higher debt to equity ratio indicates the higher level of debt in comparison to equity. Based on the graph, the debt to equity ratio ratio of Nestle Malaysia shows that in 2021, Nestle performed better compared to the years 2020 and 2022, which is 4.12%. This is because in the year 2021, the debt to equity ratio is slightly less than others. However, the graph shows that the ratio is higher in 2022 than previous years, which is 4.67%. A higher debt to equity ratio indicates greater financial risk. It implies that the company has more debt to service, and meeting the obligation may become difficult if economic conditions worsen. A debt ratio that is less than or close to zero indicates that the company has not used debt to fund its operation. Earning per share is the portion of a company's earning that is allocated to its share of common stock after tax and preferred stock dividends. EPS can simply divide net income earned in a given reporting period by the total of numbers of shares outstanding during the same period to get the figure. Higher earning per share generally indicates higher profitability, and investors frequently use EPS to compare the financial performance of different companies in the same. The graph shows that Nestle Malaysia has recorded 2.36%, 2.43% and 2.65% earning per share ratios for the years 2020, 2021 and 2022. The graph shows the increasing trend from 2020 to 2022. This further increase in EPS may indicate sustained or increasing profitability. A rising EPS is generally regarded as positive because it indicates that the company is becoming more profitable or efficient in generating earnings for its shareholders. The increasing trend in EPS may be due to factors such as increased sales, cost control measures, or other positive operational development.
Next, I will present about the return of equity of Nestle Malaysia. The return of equity can be calculated by net income divided by the average shareholders' equity. ROE is the ratio of a company's net income to its shareholder equity. The return on equity of a corporation measure its profitability and efficiency in generated income. The greater a company of ROE, the better it is at converting equity capital into profits. The Nestle return ROE ratios for 2020, 2021 and 2022 were 1.97%, 1.96% and 1.95%. The highest ROE was recorded in 2020 at 1.97%, indicating efficient profit generation from current assets. The ROE slightly decreased from 2020 to 2021. In 2022, Nestle achieved the lowest ROE of 1.95%, suggesting lower earnings relative to average shareholders' equity. The trend indicates a decline in ROE over the 3 years, with 2020 being the most profitable.
Examine the company's dividend policy and history. Nestle Malaysia dividend policy has shown a consistent upward trend over the past 3 years, with an increase from RM2.32 per share in 2020 to RM2.42 per share in 2021 and further increase in 2022. This indicates a proactive dividend policy and commitment to rewarding shareholders, as evident by the graph showing a RM2.62 per share dividend in 2022. Nestle Malaysia dividend policy is steadily increasing, aiming for stable growth trend in dividends. This policy is suitable for mature enterprises and signaling steady growth and reducing business risk. Over the past 3 years, the dividend yield has increased, reaching 1.87% in 2022. This policy indicates Nestle's commitment to shareholder value and confidence in future earnings. Nestle Malaysia, a prominent food and beverage company, is analyzed for its dividend policy over past 3 years from 2022 to 2020 using key metrics like dividend yield, dividend growth rate, dividend payout ratio and dividend coverage ratio. The results are displayed that graphically allow us to observe the trend for each ratio study as well as the company's performance from 2020 to 2022. Firstly, dividend yield. Nestle Malaysia dividend policy over the past 3 years, 2022 to 2020, has slightly increased, reaching 1.9% in 2022. This indicates a higher return on investment for the company dividends. Nestle Malaysia dividend growth rate is 8.26% in 2022, indicating healthy growth in dividends. However, the 2021 DGR was 4.31%, suggesting a positive trend. The 2020 DGR was negative 17.14%, indicating a decrease in dividends. Next is dividend payout ratio. Nestle Malaysia dividend payout ratio, which represents the percentage of earnings distributed as dividend, is close to 1, indicating a high percentage of earnings being distributed as dividends. Lastly, dividend coverage ratio. Nestle Malaysia dividends coverage ratio is above 1, indicating enough coverage for its dividend obligation. The ratio is calculated by dividing earnings per share by dividend per share. In 2021, it was 1.01, indicating enough coverage. In 2021, it was 1.00, and in 2020, it was 1.02. The impact of the company's dividend decision on shareholders' value. First, income stream for shareholders.
Nestle Malaysia dividend policy, which consistently pays an average net dividend per share of 2 ringgit 12 cent annually, significantly influences shareholders' value and investors by providing a consistent income stream and making the company attractive to income-oriented investors. Second, financial health and confidence. Dividends signal a company's financial health and future prospect by influencing shareholder perception and investment decision. Third, influencing shareholders' preferences. Nestle Malaysia dividend policy with a net dividend per share of 2.62 ringgit attract income-focused investors by increasing shareholders' value and attracting a diverse and stable shareholder base. Last, addressing agency issues. Dividends address agency issues by reducing free cash flow for manager and retaining profit to shareholders by preventing misuse of fund. Nestle Malaysia consistent dividends like to promote efficient capital allocation.
In conclusion, Nestle Malaysia strives a balance between equity and debt, ensuring stability and flexibility. This approach fuels strategic goals, operational need, and growth opportunities. It is a smart use of external funding for innovation without taking an excessive financial risk. Their financial health is robust, a conservative debt-to-equity ratio, a rising earning per share, and an excellent return of equity highlight their efficiency, financial management and profitability. Nestle Malaysia's consistent dividend policy highlights stability and prosperity, instilling confidence and positioning the company as an appealing investment for a diverse group of investors. Finally, Nestle Malaysia stands as a model of financial discipline, and their balanced capital structure, prudent net ratios, and the thoughtful dividend policy positions us for long-term success in a competitive food and beverage sectors. Thank you for watching.